Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, for the Dividend Diplomats, we are about to talk to you about an undervalued dividend stock that just crushed earnings. Can't wait, everybody.
Can't wait. Smash that subscribe button. Give the Diplomats a nice blue thumbs up. We really appreciate it. It helps keep the community going. Dividend investing, cash is flowing. We're here to help you on your personal finance journey, baby.
Finding undervalued dividend growth stocks is the name of the game. Isn't that right, Lanny?
Name of the game. The game is the name, and the name is the dividends. Stock investing is here. Bert, this is a very exciting stock that I am pumped that you're ready to talk about them. It's a great dividend stock that we've bought throughout the year. It definitely still shows insanely signs of undervaluation. A great dividend stock to buy right now, even when the stock market, the S&P 500, is at or near all-time highs.
Yeah, and this earnings season has been interesting. You've had your mix of some companies with great earnings, and you have the ones that are just getting absolutely crushed after earnings. Luckily, this one's going to be in the former, where the company's price just popped after the results, and we're going to be so pumped to talk to you about them today. So here we're going to talk about this company. We'll review some of the major highlights from the earnings, talk about an update to guidance that was also announced in the earnings release, which gets us even more excited about this stock. And then, of course, we'll run the company through our stock screener after that. But first, everybody, who is this company that we are going to feature today? Drum roll, please. Viatris, ticker symbol VTRS.
Viatris, the spinoff from Pfizer. For those that don't know Viatris, again, as Bert said, ticker symbol VTRS. They are the spinoff between Pfizer's Upjohn business and Mylan, and really forming this cash cow pharmaceutical company, a great dividend stock to have in your stock portfolio because they have brands such as Lipitor, Viagra, et cetera, et cetera, et cetera. Some big names that are heavily used. And Bert may know somebody who's very close to the industry and sees that these are the drugs that are heavily used.
And that person is my wife, who helps see a lot of patients, and she'll prescribe a lot of drugs. So as we run the brand list through Viatris and we talk through some of them, she recognizes a lot of names on there, which is very exciting to see because that just confirms that these brands are the cash cow. And that's why we were so excited when they were spun off, when Pfizer decided to keep a lot of the high growth R&D under that brand and spin off this cash cow. We knew that there was a potential dividend growth stock all-star in the making.
Bert had a feeling that the cow's udders were about to fly out a lot of cash.
All right. So on that note, everybody, let's start talking through this earnings release here. They announced earnings during this week. So this is fresh off of there. And you know what? They were great. Overall, total revenue for the quarter was over $4.5 billion, although it was down 3% compared to last year. Overall, you're seeing some strong trends and strong performances from their brand. They had better than anticipated results from Lipitor, from Viagra, from EpiPen, some of the other big brands, which is exactly what you want to see. The big hitters are taking care of business when it's their turn up in the lineup.
Yeah, and let's take a second to think really quick. This company has barely been their own for a year, and they just produced another quarter of over $4.5 billion of top line revenue. I mean, that alone puts them on pace for over 17 billion in revenue going forward. And I know Bert's going to touch on it, but guidance for the 2021 year, as well as going forward, looks very promising. And not only did they have that top line, again, usually the first year, if you come as you're a new public company, you have a lot of expenses, legal. You're sorting through kind of impairment charges. They still had GAAP net earnings for the quarter of $312 million.
That's absolutely right. And then on top of it, too, they crushed it from a free cash flow perspective. They had nearly $1 billion in free cash flow during the quarter. So a lot of cash is coming in. great sales, great earnings, and great cash flow. Those are three big pieces there, and we are pumped up, and that is why part of the reason why market responded so well.
And on top of that, through already the first 3 quarters of 2021, Viatris has already paid down $1.9 billion of debt this year, which as a new company, you take on a lot of debt typically, and they're already trying to clean up that balance sheet again to make sure that their performance stays liquid and they can move fast to keep staying on top of research and development.
Yeah, and that also helps address one of the big weaknesses here for Viatris. A lot of the naysayers for the company talk about the debt. They have a pretty low current ratio, below 1, which I know some people have talked about, which isn't what you want to see, but it's encouraging to see that they're not just taking that and accepting that, like some of the other large companies, some of the large pharmaceutical giants. They are working to do it. They have an aggressive plan to pay down some of that debt. It's fresh on their mind. They want to clean up the balance sheet, and with the free cash flow that's coming in with the earnings, they have the tools to continue doing it to hit that aggressive $6.5 billion debt reduction goal by the end of 2023.
You know, exactly. And I mean, on a 9-month basis right now, total net sales well over 13, pretty much at $13.5 billion. I mean, some of these numbers sometimes doesn't even feel real, with over 2.2 billion in free cash flow of this entity. And it's no wonder why they can easily pay and easily cover that current dividend payment, which is 11 cents per share per quarter.
Don't jump too far ahead, Lanny. We're going to cover that during the stock screener, brother.
Well, let me tell you something, jabroni.
Yeah, but let's go into the guidance here too, because that was a key piece of this as well. Because of the strong results, they increased that 2021 guidance, which is always fantastic news to see. Their estimated range from revenues was increased from 17.5 billion to 17.9 to 17.7 to 17.9. So they refined it to hit the top part of that estimate. Fantastic. EBITDA, same story. Went from 6.15 to 6.45 range to 6.3 to 6.5. You see it shifting up a little bit higher there. Free cash flow estimate for the year, 2.2 billion to 2.4 previously, to 2.4 to 2.6 billion. That's the key one. You're really seeing the needle move there for free cash flow, which will just help continue fueling that debt repayment.
And what's really nice, and to keep touching on Viatris's performance, again, we like to also evaluate a company's business. I know you always see us do the Dividend Diplomats stock screener, which we will get into, but we do like to point out other things, and we do review behind the scenes so many other details before we buy a stock or put them on a list for stocks to buy now. You know, when we went through their net sales by global products, you would have expected like one brand to just crush every other one. I mean, one brand does stand out. Lipitor is definitely one of their most popular brands with over $1 billion in revenue, but they have 3 companies, including Lipitor, with over $500 million in sales, you know, over 9 months. So again, 3 that are very, very dominant. And actually, one of the 3 isn't Viagra. Viagra is actually their 4th best performing drug right now. So again, they have a lot of different brands that produce very well. So they're not just tied to one brand dominating their revenue.
Excellent point, Lanny. So now, everybody, let's run this company through the dividend stock screen.
You're like, Lanny, shut up.
No, it's a good point. I have nothing more to add into there. I don't think there's anything more to say. So let's move into the stock screener now, everybody. 3 metrics: PE ratio less than the S&P 500, 2, payout ratio less than 60%, 3, history of increasing dividends, and 4, that bonus metric, that dividend yield. So we're recording this video with a closing price as of November 9th, everybody. So please keep that in mind for the rest of this analysis. Jumping into the PE ratio, everybody. Closing price, $14.57. Analyst expectation for forward EPS for the current next year, $3.79. That gives you a forward PE ratio of 3.84. You heard that right, everybody. 3.84 for the PE ratio.
Boom. 3.84. Definitely doesn't even seem real. Why? Because this company is still young and fresh right now. Analysts are still developing expectations, but they have high expectations for this company. And right now, stock price isn't, equating to that. This is a sheer sign of undervaluation. If you haven't seen our last video on big pharma, we thought Bristol Myers Squibb was a stock to buy now with a P/E ratio under 8.
Yeah.
Viatris hanging tough, flexing hard right now with a P/E ratio under 4.
Yeah,
Insane.
that's insane. It's absolutely wild, way below the S&P 500. I'm not even going to talk about how much lower it is than that. So let's jump into that second metric here, the dividend payout ratio. Their annual dividend is 44 cents. Divide that by the 379. That gives you a payout ratio of 11.61%. Again, very, very low.
11.61%. If they don't start increasing this dividend, at least towards the end of 2022, I'm going to be scratching my head, because with a payout ratio at 11.61%, they should be doubling up this dividend almost every year for the next few years.
Or that debt better be gone after that, because they have a lot of extra earnings to work with here. So we would definitely expect it, because I mean, the interesting thing is, after getting spun off from Pfizer, moving, I guess, kind of transitioning into that third metric of the dividend growth history, Pfizer has increased that dividend for 10, 11 consecutive years here since they cut it during the financial crisis. You would assume that Viatris, having the same kind of management team, management philosophy with the legacy companies that are cash cows, is setting itself up to be that dividend growth stock of the future here. And with a payout ratio of only 11.61% and strong free cash flow and strong earnings, the table is set for them to crush it in 2022 when they come around to their first annual dividend increase announcement.
I appreciate that, Bert. So that was that third metric. Now, looking at that bonus metric, the dividend yield, this is really where you really want to see if this is a cow that you want to milk here. Now, based on the stock closing price of $14.57, with that dividend of 44 cents per year, 11 cents per quarter, that dividend yield is still hanging tough. Cleveland tough, over 3%. I mean, that is 2x the S&P 500, the overall stock market. And obviously, I can't even sit here and say it's even 10 times your savings rate at your podunk institution in middle of nowhere right now. 3% is going to dwarf your 0.01, 0.02, 0.05. It's obviously 6 times your savings rate at Ally. So Viatris, a lot of upside with a 3% yield.
What podunk town is Ally in, Lanny?
I said other podunk towns, but then I bigger banks.
I'm kidding, everybody, but no, that's a great point. You're not getting a lot on your savings account right now, everybody. So dividend yields for a company like Viatris are obviously a nice premium compared to that. And that's why we go through this exercise to check the safety of that dividend. Can your dividend increase at a rate that's greater inflation? That's what it's all about. And that's why we run these companies through the Diplomats dividend stock screener.
And in summary, within these metrics, again, that P/E ratio is less than 4. That payout ratio, that second metric, is less than 12%. No dividend growth yet for Viatris. We're hoping to see that, again, give it some time, guys. It's only been a few quarters that they've been even paying a dividend. So I think 2022, come what would you say, Bert, second or third quarter, you want to see something happen?
It's that first dividend. The first one was in May, so I would assume there. But Pfizer also announces their dividend increase usually at the end of December or the beginning of the first quarter. So we could get an early surprise here from them ahead of schedule too. We'll find out when they decide when they're going to set that schedule.
Yeah, I guess technically from an increase standpoint, they'll pay 4 quarters next year. So it'll beat the 2021 payout next year already. So technically they're going to go maybe from the technical standpoint. So it could be a fourth quarter 2022 announcement for a Q1 2023 payment. Is that what you're thinking, Bert?
Well, yeah, I think so.
You son of a gun. But you're 3% yield. But Bert, here's a question. After Viatris released this earnings again, which they literally just released it yesterday on the 8th, what did that stock price do for Viatris' stock?
Stock price jumped up accordingly. But interestingly, they're still down year to date. They're down over 21% year to date, and they are down 6% year over the last 52 weeks. So even though they had that short-term pop after earnings, they are still down overall. It's just a very interesting stock when you look through the metrics here. I'd say it's hard to think through what you're doing, like with how well they performed, with some of the great numbers, what you're seeing there. You take that to the metrics when you run through the stock screener with that low PE ratio, with that low payout ratio, and with that strong yield. And then on top of that, you add in the fact that they are down year to date, that when the stock market, to what you mentioned earlier, Lanny, is at all-time highs. It's interesting. It's just you lay it out there and you're asking yourself, why are you not buying more Viatris right now?
I know I currently already have 120 shares, but I was buying them in the $14 range at some point in the last year. So where they're trading at isn't unusual. I was buying them at these prices already, and I was buying them on their way down to the low 13s. And now look, they're already back up over $1 since the lowest point that I was buying them at.
Yeah. So, I mean, there's no reason why they shouldn't be on my watch list. And maybe I'll be milking the Viatris cow because we're going with that reference today for the video. So everybody here, what do you think of the cow reference in the video? But in all seriousness, let us know what you think of Viatris. Let us know, is Viatris jumping up your watch list after earnings? Are you buying the stock still, even after this short-term price? Let us know in the comment section what you're thinking.
Yeah, is this a stock to buy right now in the market? Is this a great stock if you're a beginning investor, or if you're just a current investor looking to add to your portfolio? We're curious if you own the shares. Did you sell them when you got them in the spinoff from Pfizer because you own Pfizer stock? Let us know in the comments. I know Bert's shown in his videos and articles that he's been buying their stock this year in 2021. I've been buying Viatris stock in 2021. So, I've been buying at these similar prices. So I might have to start looking back at them again, even though I'm pretty heavy in pharma. But go ahead, Bert.
It's always worth turning over every stone to buy undervalued stock. So just keep that in mind, everybody. And if you haven't already, subscribe to our channel. Give this video a thumbs up so we can keep bringing you dividend-related news. I absolutely love it. Anything else, Lanny? Anything else you got for the viewers today?
That was Bert the Herd. This was Lanny from the Dividend Diplomats. Over and out.